Hey everyone, welcome in to another daily editorial here on the KE Report. I'm chatting with Craig Hemke, founder and editor of TFMetalsReport.com. Now, Craig, let's first start off by talking about the Fed meeting, Jerome Powell's press conference yesterday that really lit a fire under the markets and especially so even under the precious metals and the precious metals stocks. We'll get into your look ahead into what gold might do, what the stocks might do through the rest of this year and into next year, but from the Fed statement recap here, this was, I think, probably the most dovish hold that the Fed could have presented us with. They essentially said, look, that they are looking at rate cuts for next year, although that was already a little bit in the cards when you looked at the dot plot. However, they did move to more 3 rate cuts next year. And the big takeaway I had was from Jerome Powell's press conference where it sounded like he pretty much said they don't need major market weakness. They don't need a market collapse to start cutting rates. They just need to keep seeing the inflation numbers move down, and they're going to cut rates anyway. They think that 5.5% is too high on the Fed funds rate anyway. So, Craig, what was your takeaway from what we saw yesterday out of the Fed and Jerome Powell?
Well, Corey, to your latter point of your question, remember the Fed and the Treasury, more importantly, needs lower interest rates, right? The total debt service cost for the U.S. is now over $1 trillion a year. And they've got a lot of issuance that is coming down the pipe and refunding. They need lower interest rates. So, yeah, it's not crazy to think that as long as they can get inflation back under control, that they want to get rates back down. You know, this whole higher for longer thing was rhetoric trying to drown out inflation. So that's exactly the path they want to take for obvious reasons. Even Yellen was out talking about that this week. And in the short term, though, and again, in understanding what the Fed is doing, you know, there's 10 Fed meetings a year. I don't think there's necessarily one every month. But on the quarters, March, June, September, and December, they take a survey of themselves and they issue what's called a summary of economic projections. Okay. And that's what you're referring to about future rate cuts. Now, remember, Fed officials, Fed goons are a little bit like your local weatherman, right? I mean, they're trying to, they have their just an opinion off of their own experience, and they're trying to tell you what they think is going to happen in the future when in fact they're trying to predict chaos. Okay. You know, I mean, it was just 2.5 years ago in the summer of 2021 when many of these same FOMC members were talking about not a single rate hike until after 2023. Okay. The dot plot back then was 75 basis points for Fed funds in 2023. So you always got to, again, all of this is just kind of guesswork. So you got to keep that in mind. All right. So finally, where are we now? In the June SEP 6 months ago, the Fed and the FOMC members were projecting 4 rate cuts next year, 2024, and 5 in 2025. But then as we got through the summer, the data appeared to tick up. And in the September SEP, they cut the 4 rate cuts next year to a projection of just 2. And then everybody got freaked out, and the markets went down, and the gold went down, and the dollar rallied, and all that kind of stuff. Well, what did they do yesterday? They moved it back up to 3. Okay, so still less than what they had in June, but more than what they were suspecting in September, and now we're closer to 2024, so it seems more realistic and all this kind of stuff. At the end of the day, we know what's going to happen. The Fed, like you said, is they're not taking rates any higher. Inflation is coming down, at least by their metrics, and they're going to want to start cutting rates again. That's bearish for the dollar, and the dollar is down a couple of points in 24 hours because of this and because of the ECB saying that they didn't have any interest in cutting rates. And it's also bullish for the precious metals. But as you know, and we just got reminded of again a couple of weeks ago, Corey, it's never straight up, man. Bull markets and gold are always going to be 2 steps forward and 1 step back. But it at least look like we're in a bull market heading into next year.
It sure does. But again, let's talk about what the sweet spot is for the Fed here. It seems like we all know that they want inflation at 2%, but it also sounds like they want the Fed funds rate right around 2% as well, maybe a little bit higher when you look at what they're projecting in terms of rate cuts out a few years. And we all know how inconsistent these projections can be, but is that the environment that it seems like the Fed is its dream scenario?
Yeah, I think the Fed, with all their PhDs and all their economists, they know, they've seen in the past, that if you're going to manage today's debt, you've got to pay it back with the cheaper currency of tomorrow. So the Fed is going to want to maintain some type of structure of either basically zero real rates or slightly negative real rates. And so that then gets to what you're suggesting, that they might even be comfortable with 2.5%, 3% inflation if ultimately it can stabilize there, and then they can cut, Fed funds rate back to 2. That, I'm sure, is a dream scenario for them. That's what they want to do. It's just a function of whether they can. Again, they've got a pretty limited number of dials and switches that they can play with in trying to impact all this stuff. And again, the entire U.S. economy, global economy, is a chaotic system. We treat the Fed, not you and I, but the media and the big banks and everybody else, treats these Fed officials as if they're these omnipotent demigods that are fully in control and are never wrong. Well, like I just said, 2.5 years ago, they didn't think there'd be any rate hikes in 2023, and we got all the way to 5.5%. So Powell at least has the humility to admit that they are trying to navigate by the stars on a cloudy night. But we all in the markets want some kind of certainty so we can put our money on the line. And so too many people assume that they really will do exactly what they tell us that they're going to do. And that's what makes all of this somewhat challenging sometimes.
So carrying that over to gold, look, gold had a very nice day yesterday, having another very nice day today on the futures market. We're sitting right around that 2050 level. Silver's also having a very good day, back above $24. Still a lot of room for silver to do on the upside, but now that we have what seems like more of a Fed pivot behind us, what are some of the next catalysts to give gold another leg higher here, Craig?
Well, we should at least kind of be stable and drift higher. After the events of that first weekend of this month, and just a terrible looking, fully engulfing reversal candle on the daily chart. That led to a bad week last week, and the weekly chart looked bad. And it was like, man, are we going to end the year with a lousy monthly candle and back under 2,000? I guess anything is possible. That could still happen. But the events of yesterday, we should probably be able to survive the month and still finish okay. It's a very strong month as well. Again, you always cherry pick dates, but I just saw a guy on Twitter a couple weeks ago put out an item that said over the last 6 Decembers, gold has averaged a 3.9% gain. And there's reasons for that. There's reason for that seasonality, wedding season, pending in India and Turkey, things like that. And so we should have at least a benign macro environment for gold for these last couple weeks of the year. There are not going to be a lot of Fed officials running around. Now, there's going to be Fed officials out tomorrow. That always happens. And we're recording this on Thursday. Whenever there's an extreme reaction to whatever Powell says at an FOMC meeting, I don't know who it'll be, but I'm sure in the 8 o'clock Eastern hour tomorrow on Bloomberg and on CNBC, you'll get, Barkin or Kashkari or Williams or somebody to go out there and try to walk back some of what was perceived that Powell said. So there's not a lot of data left in the month, right? Everybody's going to be on holiday, trying not to. And so there's just not a lot of negative macro stuff coming. You throw that seasonality part on there, I think there's a pretty good chance at this point we're going to finish the month, the quarter, and the year north of $2,000. And for the generalist investor out there, the people that don't normally really pay attention to gold, that'll be a headline grabber. And it'll get them to kind of, maybe think about their asset allocation as the new year begins. And so that could set up a pretty good positive environment for first part of next year.
Let's drive down into the stocks, starting with the ETF. So GDX, GDXJ, SIL, they were under quite a bit of pressure ever since we turned into this month, pretty much day after day moving lower. But boy, oh boy, yesterday's candle on all of these charts is a skyrocketing candle, straight up, and a bit of follow through on today's trading. A lot of these levels where GDX, GDXJ, SIL, they bounce from, keep intact this shorter term uptrend that started, or at least the market then bottomed in early October. How significant was the turn in your eyes where it came from yesterday, some of those levels on those ETFs?
Right off the GDX, right off its 50-day moving average, or very near it. Gold, front month December or February, gold did the same thing, bounced right off of its 50-day. So no, it's significant that it did that from there. And again, people need to keep in mind. I've seen this now. It happens every year. I mean, we're in tax loss selling season. I mean, for some people, that's the only value in holding a mining share is you can dump it in December and use the losses that it's probably carrying versus gains that you have someplace else. You think of like Newmont. Newmont's one people should be watching this month because, it'll probably bounce back pretty quickly as gold price rallies. But at the same time, what's it down? 50% from its highs back in February? Right? So talk about one where people are, widely held that people might use to lock in some losses to offset some gains. And so what do? You sell your Newmont and then you go buy, Barrick or Agnico Eagle or something like that instead. The tax loss selling season, for me, I mean, it's different every year, but people usually want to get that crap done before Christmas. So it's usually done by the 18th, 19th, 20th, something like that of December. And I've seen lots of years. I'd be interested to see the seasonality of this chart, Corey, where the next to last week and then the last week of the year are really big up weeks in the GDX, like 8-10% weeks, regardless of how the metals are doing. So that tax loss selling stuff combined with the drop in the gold price, last week really kind of exacerbated the pullback. But like you said, they bounced from right where you'd want. GDX, as we speak, is back well above 31. Looks like, it still wants to go to 33 and above 33, 36. And those are still pretty substantial moves from here on a percentage basis.
Oh, it would be. Well, again, just the moves in the last couple of days and not even the last 24 hours, these things really started moving. And even the majors, something like I think it was Newmont at one point was up about 10% just in 24 hours. It has given back some of those gains, but to your point about tax loss selling season, it usually does end. And depending where you are, sometimes you can't even claim tax loss after a certain date in December. But Craig, when you drive down into the juniors, these stocks are still very much bombed out. So I know we don't talk individual stocks with you, but how do you go about selecting certain stocks, or what even do you look for in the bombed out juniors that shows, oh, finally money is starting to rotate in here, and boy, oh boy, they have a lot of catch up to do on the upside?
Well, that's where it gets challenging. The service that you provide is helpful. The guests that you bring on is helpful. People need to be listening to as many independent and trustworthy voices as they can, because for me, who watches the metals on a daily basis, and runs my website, I can't keep track of all these mining shares. And to try to sit there and go, well, let's see, that's how many grams per ton or how many meters, So first and foremost, I would find, some folks to help you with that, whether it's an advisor or whether it's a newsletter writer that you've gotten comfortable with, something like that, so that you can identify winners. From there, though, management of your emotions is going to be very important because, if we're right and the Fed's cutting rates on balance, in this election year that's coming up, and let's say gold does another 10 or 15% and finishes next year at 2,400, that's going to be a pretty good environment on balance for the mining shares. But it doesn't mean they're all going to go up, right? You might have a basket of 10 different juniors that you like across the board, and it might, 3 of them might really do great, and 4 of them at least keep up with the GDXJ, and then the other 3 are just dogs. You've got to be cognizant and aware of the possibilities with your dogs, and you don't want, you got to like step aside from your emotions and go, okay, these aren't working, their drill results aren't working out, that, that kind of thing, so that you don't get dragged down, and you don't benefit from what should be, or benefit as much as you could from what should be a pretty good positive year. But like I said, even I, who's done this now for 13 years, I do not consider myself an expert in the mining shares by any stretch of the imagination. So I'd encourage anybody that thinks they can make some money in those babies next year to find some newsletter writers or a broker or somebody that that knows more than they do, and then they find as much additional information, objective information you can find.
Yeah, it really is all about just having a trend too, because it does lift a lot of these stocks higher, and quite frankly, picking individual stocks in bear markets, even flat markets, is very, very difficult. We all see just how easy the game can be when we have an uptrend in gold price. And right now, hey, gold's doing well, but it still needs to keep that momentum going, just like some other sectors are doing that garner people's attention, because there are a lot of trend followers out there. But hey, so far this was a pretty interesting week, a very interesting week with the Fed statement, all kinds of other central banks, but the Fed really stole the spotlight with what Powell had to say, and just look at the market reaction so far, and at least a little bit of a follow through today. Craig, thank you as always for your time. I'll post a link to your website, and we'll chat again soon. Have a great rest of your week.
Thank you, my friend.